The Australian stock market set to open higher this morning after Wall Street enjoyed a July rebound. Joining us now is Peter Switzer, the founder of the Switzer Report. So, we were talking about a floor just a couple of weeks ago. Maybe we were right, Pete. The floor's been hit, has it?
Yeah, I think the bottoming process is becoming more believable, Pete. And look, a curveball could come from left field, but I think Jerome Powell really helped this bottoming process by giving a 0.75% interest rate rise last week, but then saying, basically we might have to start pulling back on the magnitude of these rate rises. He didn't use those words, but that was the implication. And that's why the stock market is like what they've heard. And, by the way, I thought I'd do a quick calculation before I went on air. The US stock market is now up 8% in a month, and the Australian stock market is up 6.2%. So what we were talking about a month ago looks as though we're on the money, but as you know, stock markets, it can turn on a dime. But so far, so good.
Yeah, no, that's good for everyone. Super, obviously, too. The US in recession, stocks going up. How do you explain that, Pete?
Yeah, it is unusual, isn't it? But I think that's the bottom line, is that you get this, they've got a technical recession, but, no one's really calling it a real recession. And I think Janet Yellen, the US Treasury Secretary, sort of summed it up neatly by saying, how do you have a recession when you're creating 400,000 jobs a month? And I think that's a pretty fair call. And I think, Pete, the bottom line is we've lived through the most unusual economic period, I think, in my lifetime, and probably ever since the Great Depression, with lockdowns and things like that, and cash rates going to 0.1%. So therefore, you get these really odd developments where usually a technical recession implies that the economy is really going to suffer. But at the moment, the US economy could actually bounce out of this over the next 2 or 3 quarters, and that's part of the reason why the stock market is going up at the right.
I mean, Janet Yellen also, 6 months ago, said that the US wouldn't have any problems with inflation. I mean, is she in denial?
It's all guesswork, Pete, when it comes to economics at the moment. You can't rely on old indicators. And, we saw Phil Lowe. He said we wouldn't have an interest rate rise to 2024. And as I say, because we're going through unusual situations, we're going to look at unusual economic indicators. And I think the unusual ones are the ones like, economic activity trackers and inflation pipeline indicators. All these things we never talked about, 2 or 3 years ago, but they're really relevant now.
Okay, let's finish on housing, Pete. It's all across the papers this morning. Tumbling house values. Some are suggesting, especially in New South Wales or even Sydney, that the biggest drop in 40 years has now been seen. Is that your measure?
Yeah, I think so. Well, what they're looking at is a 2.5% fall in 1 month. That's July. You multiply it by 12, and so you annualise it. Very, very big. Over a quarter, it's down 5.3%. Actually up 2% over the year, but of course that was driven by the months before the Reserve Bank started raising interest rates in May. Pete, I think the bottom line is this. I don't want to go too soft in these headlines. I actually want to join with all the other people in the media who are scaring the pants off Australians about, 30% falls in house prices. Though in brackets, I don't believe it will be 30%. But if we don't scare everybody, they'll keep on spending, inflation will remain high, and the Reserve Bank will raise interest rates too many times. If we scare the pants off people, we won't get the big interest rate rises that have been predicted. And the money market has pulled back their call from a 4% cash rate to 3%, and that will actually stop house prices falling by as much as the doomsday merchants are predicting.
Well, I mean, they probably needed to come down a fair bit too, because it was unsustainable, the rises that were being seen.
Yeah, exactly. They're ridiculous. They came out of the 0.1% cash rate. We've got to get back to normal, but we don't get back to normal too quickly, or we will see a 30% house price fall, I think.